As we saw over the weekend, the pledges started to unravel, maybe unravelling less given his comments to LBC. He says, you know, they are enforceable, but it just shows the difficulty May has in balancing the pro-Brexiters, the Remainers, the EU and the DUP, which is propping her up. Yeah,
I mean, obviously the political landscape changed excuse me, last summer after the election. And it wasn't very easy beforehand, because you clearly have a large chunk of MPs who want to, or voted to remain, who think that we should have the softest possible Brexit. And we have the, if you want, for want of a better word, ultras, who clearly want Brexit at any price. And balancing those two is actually an impossible task. I think what really the only thing the government can really do is to appeal to the economic interests of the country and say, look, we need a deal. You're going to have to compromise on some things. You're not going to get everything you wanted. And some would say that perhaps the agreement, such as it was, that was achieved on Friday, went too far for the likes of some MPs to swallow. But the fact is, that's all we're going to get. So let's deal with it and let's move on. And let's try not to annoy the EU any more than we have to.
And we'll move on to the hardest part of the deal, which we're regularly reminded since Friday. Sterling, we heard from many, Peter, better to travel than arrive. Is that the story? Now that we've got the first part out the way, Sterling's ascent has, albeit for now, come to an end.
Makes sense. I mean, you know, I guess investors were looking to Sterling as you know, some kind of positive news which would send Sterling up. But thereafter, I mean, what is there to shoot for now, I guess, is the question. Unless we're going to get a Bank of England rate hike anytime soon, which I doubt, it's hard to see what will drive Sterling higher. I mean, I think over the course of the next, certainly 6 months, as the debate swings backwards and forwards, you're going to see an awful lot of volatility in Sterling. So I think investors are going to have to be quite cautious. But the one thing worth keeping an eye on is investor positioning. At the moment, is relatively flat. But you know, that could swing around. If we start to get a big negative there, that's going to be a signal that Sterling's set for a fall.
So BOE, which we didn't discuss in the last section, meets this week, 9-0 forecast. They just sit on their hands, do they?
I think so. The economy is doing, I mean, it's not great, but it's okay. Inflation is likely to dip over the course of the coming months. And until we have clearer signs of what's happening with regard to Brexit, it doesn't seem like a very sensible strategy to tighten policy further. So just wait and see.
So what was it, the BCC downgraded their view of the economy today? More and more are looking more gloomy, glass half empty than glass half full. Which camp are you in the next couple of years?
Well, it depends on what you think is half empty, half full. I mean, given the headwinds we face, you know, a growth rate of 1.5 or thereabouts, you know, isn't too terrible. It's an underperformance relative to what we've seen recently. It's an underperformance relative to the rest of Europe. So in that sense, you know, it should be seen fairly negatively. But, you know, I think if we can continue to hold on without any great, you know, cracks in the economy showing, then I suppose you could say it's glass half full.